And away we go. Hello, everybody. Good morning. Happy Saturday, Wall Street Jesus Saturday Sweep Series. Very, very exciting week, mostly for the Bears out there, but some light at the end of the tunnel as we close out the week. A really interesting day Friday. A lot to talk about, not just flow, what's going on as far as overall sentiment out there. What we can look for, what to keep a close eye on going forward. And I think that's how I want to at least lead off this webinar, is kind of take a couple steps back, reflect on what led to where we are now, and then dive into what we're seeing currently, and then we'll move forward into next week. And again, not get caught up in trying to predict what may happen, but some evidence, some signs of what to look for in case this climate is looking to change, okay? And let's start by this, okay? Because a lot of people like to brush it aside. They don't want to hear it. It's spilled milk. Maybe they got caught too long or whatever the case may be. But these are the times, especially more so if you got caught in this pull, to look back and see what you need to do different, because you will be put in this situation again. I promise. Even if this little panic attack in the market here comes to an end Monday morning, there will be another time where this market will get ahead of itself. Sentiment will get a little too bullish. The flow will still look bullish. And you need to be prepared so you can at least get yourself into a better position to survive something like this. Okay. And I don't want you guys to get the wrong impression, because I never once told you guys to get out of the market, as you guys know, when this market was flying like that. Okay. Because I don't believe that's the smart move. Okay. So you're going to see a lot of bullish sentiment in a bull market. It's normal, okay? But when things get a little too hot, you have to be prepared for something like this. Now more than ever, we're seeing these things unravel quick. Snap of a finger, boom, 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 and this happens. Back in the day, when I used to trade, you guys don't know what a luxury you have by seeing something like this. You ask anybody who traded, the years that I got into the business and stuff like that, you would have these things drawn out for months, fake rallies in between. It would never look this dicey right off the bat. Okay. So that's a good thing. That's a good thing for us now. Okay. Because like we said, the one thing you could hope for is that a top will set up like this one just did, because you had more than enough time to put on protection, to size down, to take the proper, measurements for you to survive this. Okay. I'm being honest, throughout my career, I never had the luxury of this. Very rare. Okay. Very rare. So when you look back now and you say, okay, when just by looking at a simple chart of price, when things get a little too hot on the upside, without a breather, without some sort of pullback consolidation, again, it's not a time to push the eject button, get out of everything, because you may get out too early and miss on some decent upside. You don't want to do that. Okay, but a time to size down, put on some protection, do what you need to do. Now is the time. Now is the time to figure out the stuff you need to do. So when you get put in that position again, you're ready. Okay. Don't wait for the last minute like everybody probably did in this last pullback. All right. And more importantly, the reason why you size down, okay, the reason why you put on a little protection is because not only to avoid the losses, none of us like to lose money, okay, but this may come back and be at new highs 3-6 months from now. Who knows? A lot of times in the bull markets, they are. Okay. But the most important thing is you want to have the bullets to fire down here when you see signs of a new uptrend starting to take place. Okay. The biggest winners, at least for me, okay, especially on the swing trading end, the position end, always came out of something like this. Okay. Always. If you remember up here, when everybody's asking about BABA, Facebook, Apple, how high can they go? Can they keep going? That's the tough time to size up there, because you know this is the inevitable. At some point in time, this will show up. Okay? So the biggest winners, you're going to come in and let's say you buy, like we saw some action, and we'll go over that Micron. Okay? And you buy some calls 6 months out or whatever the case may be with some decent time behind them. And if you're fortunate enough to catch a decent rally out of this, and God forbid, new highs, think about the potential on some of these names that have come in and been taken down. Okay, so that's where, a lot of times we were looking at names like a Marriott and stuff like that, and you're like, how do you catch these things? And those are the times you catch them at a consolidation. All right, so that's why it's important to make sure you have the arsenal to take advantage of that when that time comes. Okay, and it doesn't mean you have to catch a falling knife. You could have bought nothing so far in this pullback. Okay, and you want to wait for volatility to calm down, even if it means higher prices from here. Okay, but still think about that entry where a whole new batch of flow, new leadership, new rotation, new bull missiles, initial activity, all that starts up out of something like this, right? You look back, like somebody was mentioning, you look back at some of the bull missiles that have come out of pullbacks or even consolidation and where they ended up. These are the times you want to start paying attention and looking for these things. Okay? So again, you want to be prepared, even though obviously we're on the total other side of the universe right now. You want to be prepared and have the proper game plan in place for when you get put in that position again. I think that's the most important thing you can learn from this. Okay? And now is a place where you start looking for new initial activity and some signs in flow and sentiment of where an upturn may take place. All right, so now let's fast forward to what we've been seeing throughout this pull and what changed on Friday. Okay, as the market's selling, okay, the flow changes as well. And if you guys remember me telling you, very rarely are you going to see any warning signals up at the tippy top. Okay, when you look back in hindsight, you'll always find something. Okay, but I'm being honest with you guys, from my experience with flow, I can easily lie to you and say, oh yeah, there was a put buyer there. It's really hard and really difficult to decipher that while you're in the midst of a full-fledged bull run. Okay, because people are putting on protection. Like, I'll give you an example. And a lot of you probably remember those semiconductor SMH put bets that came in right before earnings season. Like, they stood out. That was some big time put action in the semi ETF, SMH. Okay. So you look back now, you say to yourself, well, maybe that could have been a sign of caution. The issue there was you were going into earnings, and they very easily could have just been playing, protecting off a sell the news event, because it's been a group that's been hot, and a lot of those names were already under some pressure. We saw some SPY puts and stuff like that, but we were seeing that along the whole move. Okay. But what we did see is a change as far as on the intraday flow, we started to see put sweepers get aggressive. We started to see, as I like to say, this tote board light up red. Okay, on days where you would see sporadically, like an SMH, okay, a put buyer here and there. All right, and it would get your attention because it stood out like a sore thumb in a sea of green. But once this turned into this, and early on, okay, we started to see this flow just look like a hot mess. Okay, a hot mess. More red, just simple color coordination here. More red than we're accustomed to seeing. You see how the board looks right here? This is what the board started to look like, where mostly the aggressive activity, the size, was all on the put side, and the call buying was light and pathetic. Okay, we were seeing the opposite of that throughout the whole bull run. Okay, and those are signs where I would become cautious. Even as a day trader. Like when I see flow like this, you know, the board all red, I'm looking for little windows of opportunity where there's some call buying comes in and just looking to take advantage of that momentum right there. Okay, that's what I'm doing. There are days, Friday, I didn't do anything. Literally, I didn't trade a thing until those bull missiles hit. Everybody else out there was, you know, having a bull, playing the downside and riding the selling. You know what I mean? Me, I don't like to get involved in that because I've tried that. And the thought of me missing what we had Friday, if I was, let's say, betting on the downside on an intraday, and all of a sudden flow comes in with bull missiles, and I got to close out my puts or my shorts, flip to the call side and get long. That's not easy to do. Think about that emotionally. And not easy to do physically. You got to be pretty quick. So I know the market goes up more than it goes down. I know there's a hell of a lot more call sweepers net throughout the course of time than put sweepers. So I have no problem at all waiting for call sweepers, aggressive buying to show up. And that keeps me disciplined at the same time. Okay. So again, what we've been seeing is the flow has been a hot mess, a lot of mixed flow, a lot of aggressive put sweeper activity, especially in stuff like weeklies and things like that. Some size out there on the put side, some huge IWM put spreads, you name it, VIX, VXX, UVXY, the whole 9 yards. Okay, the whole 9 yards. So what the game plan was throughout all that, all right, and if you members, you know, I've been preaching that day in, day out to drill it in your heads and on this webinar. If you're like myself and you don't feel comfortable playing the short side, okay, and my recommendation, if you're a newer trader, that's the right outlook to have. Okay, because you have to be quick and know what the hell you're doing to make money. But if you're like myself and you're waiting for that opportunity to line up, it is a perfect time to build a watch list, a hit list in a sense. Okay, see what are they buying? Maybe they're nibbling on certain things. You know what I mean? Maybe they're taking little stabs, feelers here and there on certain names, and then eventually will lead to getting hit with a missile. You know, so it's a perfect time to line up a couple names. Most of them have come in a decent amount. And you're ready to take advantage of the flow when it does turn. Okay? And you could even yourself nibble. There's nothing wrong with that. Like, for example, you see some action in Microsoft, and you've been looking for an entry on Microsoft for so long, but you knew that this thing had to pull, okay? And you see some flow out come into the name, you know, little bits and pieces with some time behind it. Go ahead, take a stab. If it comes in a little bit more in a couple days, you see some flow there again, add to that position. You know, does nothing for a couple of days, bounces around, maybe even has a little bounce, goes higher. You think it's still a decent spot, add to that position. You have some time. Okay? There's no reason you have to fire all one shot if the flow's not accommodating. And this way, again, these are the perfect markets to do that. When stocks are just going higher, you can't do that. If you don't buy right there at the entry, chances are in a week from now that stock's already at sell targets. All right, so there are a lot of things to do where you don't have to be at the edge of your seat all gun-ho hitting buy buttons and treating it like it's a all-out bull market, because it's not, okay? Especially when the flow's not there. I mean, that's what I'm looking at. Again, I keep referring to the flow, and I'll refer to sentiment because that's all I look for. Okay, so if you're looking at other stuff, you applying that stuff as well. And I'll tell you again, somebody asked a question, Dean, earlier, of how Lucci applied it on Friday perfectly, and we'll go into exactly what the hell happened there. Okay, so then what do we see Friday? Okay, flow's a mess, mixed, not all bearish, but mixed, some earnings flow, stuff like that. Okay, you could see like Micron was catching, you could see some small sweeper activity and little things like that. Facebook, nothing that really hit home. Okay, Citigroup started to catch some action into weakness, and that action started to pick up. And then the Tesla guy showed up. Okay, the first bet that looked a lot different than everything else we've been seeing was in Tesla. Here it is. And this was it. Okay, how many times have you guys been asking me about Tesla flow? Right? And like a broken record over and over, I know you guys love the name, but it's rare Tesla catches a good looking sweeper. She'll see some weekly flow, a little block here and there, right? That spec type action. Out of the money weeklies, saw some pre-earnings action, stuff like that. And then once in a while, you could probably count on one hand, she'll catch a bet like this. All right, so somebody comes in, you can see not a big lot, sweeps 272 contracts of the September 320s, and look at the wood there, $37. All right, so you can see the time. What is that? That's 2 o'clock right on the button, right? $1 million in premium, and that was into weakness. All right, so all of a sudden, and think about where we're at all week with the flow. Don't get me wrong, there was call buying, but every time we look, earnings in 2 days, a block tied to stock. Yeah, there was always an excuse behind the buy. It was nothing clean is the best way to explain it. Nothing clean. Nothing that got me excited. And then all of a sudden, out of all names, the Tesla catches a sweep like that. Okay? Then you had the Citigroup, which was already seeing activity earlier, not as aggressive, but seeing legitimate buying. That was seeing more activity. This is one of the sweeps, March 2nd, 70 and a half calls. Okay? So they found a bank. Bank of America started to see some flow as well. Bank of America always sees flow, saw some more flow. Okay? Then we had the Micron guy. And we've been wondering where this guy has been for so long. You know what I mean? I call them the Tepper sweepers, named after David Tepper, who has his biggest position, last I checked, in Micron. And throughout this whole bull move, since Tepper has been involved, we would see these sharp, deep in the money sweepers continuously throughout this whole bull move. Literally, it seemed like all last year. Okay. Then, had earnings, finally topped out. We didn't see them at all throughout this whole thing here. Nothing. Some bullish activity. Micron's like Bank of America. There's always some sort of call buying. But if you guys remember, we kept saying, where the hell are these tepper sweepers? And then lo and behold, when the market looked its worst into this weakness, he showed up. And this is the damage he did, okay? And this is what a tepper sweeper looks like. July, $24 calls, right? Again, the time. You see the time? Now, don't get me wrong, there'll be weekly action around it, almost definitely, because a lot of times it's going to create momentum just off this order flow. But the Sharpies, the real action, always has some time. These guys aren't looking to flip weeklies. July 24s, sweeps multiple exchanges, $16.89, opening bet, 1.7 mil. Okay? Then, right, it was literally one after the other. July 21 calls, deeper in the money, sweeps multiple exchanges, opening bet, another $1.5 million. Then you got another 500 calls, July 21 calls. That's $1 million there. Oh, I think that came first, actually. Yeah, it came first at $19. And then another one down here. Can you see it? For $19.05. So all in all, he swept and tattooed the July deep in the money calls. And those of you who are familiar with these type of sweeps, the Tepper guy throughout the Micron move, know exactly what the hell that's all about. You know, and again, a lot of times we see the Micron flow come in already in bull mode. You know, and what's that tell us? Okay, they're still bullish. That's great. We know that already. Micron in some nice consolidation here, right? Weakness, but it's held up because this consolidation started a bit earlier, right? When things were still going strong there, this thing really was in breather mode, and then he shows up right into this weakness here. All right, and again, the key is time, guys. The key is time, because you don't have to nail, and a lot of times these guys do, but you don't have to nail the exact lows, the bottom, to make good money in panics like this. You know, everybody's looking at the right now. Everybody thinks like if we don't bottom right now, then nothing's worth even looking at. But this thing could come and trade lower, as we've seen in a lot of names where they have time, right? And they can add to it. Think about like UA. If you remember UA, now that wasn't a market specific type name, but there was a lot of negativity around that EA, right? A lot of negativity around there. And continued lower with all that selling pressure, that negativity, right? But what they keep doing, they kept adding with time, adding with time, adding with time. And it's almost like you couldn't even recognize when that bottom took place. You know, she still didn't look that good, even after she found the low. And then before you know it, higher highs, and boop, gone. All right, so that doesn't happen. Like I said, every stock, every environment's different, but I'm just saying you don't have to get caught up on nailing the exact low to make money. It's not that easy to do that. All right, so that was the action in Micron. And let me just get to, where am I here? Okay. BX, another financial that a lot of people were interested in, but really couldn't find an entry because this thing just got carried away. Nice pullback there. This is a lot slower, choppier name, so you're going to need the time. Those were Jan calls. But a lot of people out there, a lot of smart money think this this is the space in financials to be in. You know, you can see there's some choppiness to this. You know, not that smooth. That was another name that got bought. And, Maxim was one of the tech names that caught a sweep. This is, if you guys remember, a Japanese company supposedly was making a bid. They denied it. Then it got killed in the aftermarket, caught a sweep. This was actually, believe it or not, up a little bit while the market was down on Friday, and it caught a sweep there. So this list, there was no activity like this throughout this whole correction, as sharp, as good looking as we saw on Friday. Now, the flow overall, again, this is just some of the better looking action, some of the action that got my attention. There was a ton of buying, okay? And that's a good segue to get into what Dean was asking before, okay? The opportunity, the lower risk opportunity in this market is what happened, in my opinion, on Friday, where you sit, wait, let the market sell, let the market chop around, okay? And then when the flow lines up, that's where a spot you can find an entry. And if you get a little lucky and the buying continues and they press their bullish bets, you get a move like we did Friday. Okay, and that's exactly what happened. So Dean was asking, what did Lucci see? Okay, because Lucci trades throughout all this, pretty much. He was trading all morning. He was shorting rallies. Lucci was shorting basically every little rally on Friday. Right, Dean? That's why you're asking. Lucci was shorting every single rally on Friday. All right. Now, Lucci, as you guys know, he looks at the tape. Okay? He's looking at the tape. So when he sees sellers lining up, or even a lack of buyers there on all these little rallies, he looks at it as an opportunity to get in, buy puts, and then just for a quick trade, play the fade. All right? That's his strategy throughout any corrective type environment we're in on an intraday basis. Now, on the flow side, as I've been telling you, every little rally we saw, there was no call buying. There was nothing aggressive coming in. Zero. Okay? So what Lucci was seeing on the tape is confirmed as well by flow. No buyers coming in aggressively in the option market. No buyers coming in on the screen where Lucci's looking at as far as the tape in the option market. Right? Pretty crystal clear there. Then, as we spoke about with the Micron and all the other stuff we saw, what changed on this bottom here? First of all, you got a lot of sellers drying up, right? This is long in the tooth here. So if they're going to dry up, they're going to dry up at some point in the afternoon when you got a downtrend like this. So Lucci started seeing sellers moving out of the way, if I remember correctly, is what he was saying he saw on the tape. Okay? The sellers that would show up on these little bumps, these little rallies, weren't lining up on what Lucci was looking at on the tape. Okay? And what happened in flow-wise, it's pretty crystal clear, right? So Lucci sees on the tape, Dean, that there are no sellers there. All that selling that would show up on each little bump up throughout the day, there was no one there. And what he looks at is, and you probably heard him mention this, he said there's no liquidity there. There's nothing there. In other words, if they come in and buy this thing, you can get a big move. All right? And what they do? They bought it, right? They bought it and continued to buy it. They bought everything under the sun. You can see the board here, everything, right? This is right where Lucci was looking at the tape, seeing no sellers, and making a bet that if they buy this market here, if buyers show up, it can get out of control to the upside. And that's what happened. And once we started to see the high beta stuff get lifted. It was almost like, I don't know if you heard me, Dean, there were algo sweepers basically set off throughout the afternoon. Once you started to see the ETFs, SPY, IWM, they're buying UVXY puts that expire the same day. That's when you know, it was game over. It was game over. And that's when you get, these runaway whoop. So that's how, and that's a perfect example of how the flow lines up with what Lucci looks at tape. They're basically, he's looking at the same thing. You know what I mean? He's looking at buyers and sellers and how they line up in the markets and the flow. Like a lot of times, Lucci will look at, there'll be sellers on the offer, and we'll see them sweep the offer and they'll hit the board. We'll see the buyers in real time. So it works perfectly for that. But again, if you think about it, you got to be ready for these opportunities, and you got to try to be disciplined for these opportunities. Now, Lucci, you see what he does. Not many people can do that. He looks to take advantage of all this. Okay, of all this. But I honestly, and I've been in the game a long time, I don't think I've seen anybody be able to do what he does when he's wrong to get the hell out of the way. Okay? If he treated this rally the same way he was treating these rallies, okay? If he didn't see what he saw on his end yet, he would be caught. And that's where he unravels quicker than I've ever seen anybody do it on the option side. But, that takes experience, the knowledge to feel comfortable with it. But waiting for these type of opportunities to line up and being ready to fire when they do is a lot easier, Dean. You know what I mean? Is a lot easier. Hence why I don't play the short side. You understand? Because like I said, if I missed this, I would have been suicidal if I missed this. I had a great day Friday, all from this. Basically, I didn't trade any of this. Now, I know a lot of guys in the room made some decent money on the short side. I'm not taking anything away from that. But for me, my style and what I'm comfortable with, I have to wait for this to line up. And then I have the confidence to fire, get long. Because when they're buying like this, I know the support's there. I know it's real. And that's how momentum builds. They're sweeping SPY calls. Market makers have to hedge those bets. How do you think they do that? They buy SPY. That's kind of what happened, guys, on the downside, by the way. Okay? Everybody talks about, the flash crash, the VIX products, this, you're hearing a lot of excuses. But what happened on that little so-called flash crash that we saw recently, because of that XIV and those products basically blowing up, right? Everybody trying to unravel at once, they were buying SPY puts as a hedge, okay? Those SPY puts, the market makers have to hedge that action. Hence, they put pressure on SPY, and it all snowballed into one, and that's where you get the whoosh. The market was quiet flow-wise all day up until that little window where we just saw a band of put sweeper activity come in out of nowhere. Like a wave of put sweeper activity came in out of nowhere. And that was probably people, hedging that XIV blow up and some of the other volatility stuff. All right. So that's the answer to your question, Dean, as far as what Lucci was looking at. He looks at the tape, and when he sees sellers dry up, he sees buyers lining up, and then the flow supporting that. That's what, when we talk, that's when him and I call the sweet spot. That's the sweet spot. You know, that's where you look to buy dips. Another thing Lucci likes to do, right? Sell rallies when the market's heavy. That's where you look to buy dips on an intraday basis. You know, and again, sometimes it's as easy as, you know, color coordination off the board. You know, that's why we kind of did this. You know, when the flow is messy, it gives you an idea of the momentum out there. It's probably a good chance that it's choppy or will be choppy if it's not already. If the board's all red, there's a good possibility there's some strong momentum to the downside. When you get a change in trend and the board turns into this, that's where the upward momentum starts and takes place. And now, again, that's a change in climate. Now, the momentum is to the upside, if that makes sense. So that's where the real opportunity is now. That's where all the fun is. People who are trading intraday. You know, it's easier said than done when it doesn't line up like that. That's why I'm mostly on the sidelines. But again, if you were playing the downside, a lot of people are killing it on the short side. Now they better be careful because they may get run over. They probably will before it's all said and done. But they're having fun now. All right, so this was the chunk, again, of the bullish activity. Microsoft, another name that's been seen buying, steady buying throughout this downturn. Intel caught a missile the day prior. You guys probably know about that. I spoke about that. Okay, that's another name that caught a big bet. What do we need to see going forward? Okay, a lot of times, here's what we'll see. Okay, if we have the luxury of more weakness in this market, you got same game plan now. You're looking for entries into the weakness where flow is accommodating. Okay, hypothetically, Monday, we sell off in the morning. Okay, in my opinion, now you're leaning bullish and waiting for that call sweeper activity to show up. Okay, because already they kind of showed their cards, right? They showed that they're willing to buy this weakness. They haven't shown that at all. Okay, but a lot of times, guys, I kid you not, what happens is you walk in one of these days and you see Dow futures up 400. That's what usually happens. That's what usually happens. I'm not going to lie to you. That's what usually happens. You walk in and you see Dow futures up 450. And now you were waiting for a test of the 200-day or the bottom or the blah, 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 blah. And then what happens? Now what do you do? Right? Now what do you do? Everybody wants to test. Everybody wants to test, right? Markets come back and test. Markets come back and test. They may come back and test, but you may see a huge squeeze prior to that. Okay? Because already sentiment is there on a shorter term basis. It's there. There's nothing really to wait on there. That NASDAQ indicator we look at is more intermediate term. But here, I got a couple things here that I could show you that I look at off Sentiment Trader and stuff. What's this? Equity put to call. One of the ones I look at. Like, we're right here. So what's this tell you? If there's a day, if we're down Monday, where's this going to go? You're going to buy that, right? Right? So that's the equity put to call. This is another Sentiment Trader, whatchamacallit, indicator, smart money indicator. Smart money likes to buy weakness and sell rips, right? You're right there. Again, any little further weakness, you're going to have a strong buy signal there. This is some other, again, simple stuff. New York Stock Exchange, NYSE equity put the call. You're there. Dow Jones equity put the call. You're pretty much there. Look at this one. You want to know this one? This is the degenerate, I call them bearish ETFs. So this is bearish leveraged ETFs. Look where that thing is. Okay, so what's the logic here? You know, why look at these things? Why do they work? Are all these people buying these bearish ETFs, are they going to score on these things? Are they going to score on them? Now, you know, once in a blue moon, they do. In 2008, people were making money off these things. In 2008, you were scared to have money in your brokerage account because it might not be there the next morning. Okay? So we can look at, you know, the rare events where this doesn't do its job. You could count on 3 fingers. You know? Like I say, if you're worried about a 2008 style event, the stock market's the least of your concerns, I promise you. If you're afraid of that happening, if you think this is going to be worse or at 2008 levels, start building your bunker now. Don't worry about the stock market. Your money may not even mean anything. Maybe you're better off buying Bitcoin. You never hear me say that again. But I'm dead serious. 2008 was Armageddon. We were on the brink of the end of capitalism, the U.S. economy as we know it. Yeah. Start buying some canned food. So, you know what I mean? I'm being serious, though. You can't worry, you know, you can't worry about stuff like that. Yeah, you take, again, you shouldn't have all your money in a trade anyway. You know what I mean? We're speculating, we're trading, we're all playing with spec money, right? I hope we understand that. If you're playing with conservative money, you should not be playing options. Okay? You should probably go figure out some blue chip ETFs and stuff like that and tuck your money away. This is all spec money we're talking about here. If you're playing options, you're rolling the dice. Just drill that in your head. All right, but all kidding aside, so everything is there that you want to see on the short-term basis. You know, this is what this market's doing right now to people. Okay? This is a perfect example. Up, we're going higher, higher, spit them all out, and then eventually we'll be at Dow 60,000. The squeezometer was it. The squeezometer bounced a bit. This is this thing we look at. This is not it. This is from another day. But the squeezometer bounced because of the rally a little bit. CNN fear, greed. It's all there. Remember CNN fear, greed was greed. Now back to fear. They're all there, guys. You're going to hear people that used to talk about this stuff now ignore it. They always like to use it as examples when it's not around, and then when it's around, not use it for what it's worth. You know what I mean? Does that make sense? You know, everybody was talking about the extreme bullish sentiment. Nobody wants to talk about the washout right now in sentiment. That's another thing, Jim. Thank you. Did you guys see the outflow numbers? Did you guys see the outflow numbers? So basically, they came in January and bum rushed in to ETFs. All right. And just like that, with this pullback, record outflows, the highest ever. They took out more than they put in. So not only did they put in a bunch of new money at the top, they took that out, and they took out what money they had in prior to that. Oh my God, you can't make it up. You can't make it up. All right, so again, can there be some sort of flash crash off these? Of course there could be. Chances are it's going to get bought right up, right? Can we walk in Monday, the futures are getting destroyed and everyone's panicking? Of course it can. But chances are, from what we started to see Friday, it'll get bought right up. You understand? And the reason I say that is they showed up. It's that simple. They showed up. Okay. Now, does this mean a bottom? I wish we could make a call like that off what we're seeing. You know, usually it means a decent rally, a decent squeeze. You know what I mean? Usually means a decent squeeze. Can we rally? Right? You could probably vouch for me. We've seen markets where you rally, top out, and then come down and do a test. That would be a disaster, but that could happen. Yes, that could happen. You know what I mean? That could happen. Or a decent size rally, and we finally top out, and then there's some selling, and that's where we'll see like the NASDAQ sentiment indicator and stuff like that start to signal. That could happen. But usually when you see this sentiment and when you see signs of buying on the sweeper end, you look to buy weakness. Weakness is the opportunity. Weakness is the opportunity. You know, and think about the room. You know what I mean? Like the Dow was up 500 at right before the close. I think we closed up 350 or something. But you know what kind of moves there are in between all this? That's what I'm saying. You could see the Dow, you could see the futures up pre-market Monday up 500, and that's not even going to make a dent. What did we close? 332. I think we were up over 500 because we were calling in the room Dow plus 500 when we started to see the buying. Yeah. So let me get to a couple of your questions. You could ask me as far as names are concerned, if any of your names are catching action on any of the stuff we spoke about here, sentiment or flow, strategy, whatever's on your mind, feel free to let me know. Fire some questions at me. Yeah, Maria, Visa, interesting. Visa and MasterCard, there was some small like put sweeper activity, probably just protecting. And then there was some size call spreads, I think they were, right? Weren't they call spreads? And then there was a little bit of buying as well. We saw it come in Friday. So honestly, Maria, I think based on what we're looking at now, there's a good possibility, like if we rally, all these things that got hit are going to rally with it. And then I think after that becomes more of a flow thing, right? Where do they rotate? You know what I'm saying? That's where you want to get a gauge from flow now, where hints of maybe what names may lead us out of this. Because what could happen is like we get a rally over the course of a week, and then after that, some things, run out of steam and some groups out there outperform. So that's where I'm kind of hoping the flow goes from here type thing. Because in reality, it's hard to see this market snap back and some things not participate really. Big names like this that got hit. Some may perform better than others, but that's more luck than anything else. Jim saying he's got a watch list together with some research behind it. That's music to my ears, Jim. That's exactly what you need to do here. You know what I mean? That's exactly what you need to do here. Don't be afraid of the weakness. More importantly, if we have the luxury of getting it, if we have the luxury of getting it, I think again, any fades you see intraday, the scarier they look, it actually the better the opportunity. But like I said, unfortunately, in this market, a lot of times you don't get too much of it before that slingshot, and then they make people chase. You understand? So Jordan saying he bought some on his dip yesterday. That's good. Jordan, like I said, if you're early, that's okay, because we're saying weakness is an opportunity, and if you're not, at least you can make some money there. That's the way to look at it. George is asking about Google, SWKS, Expedia. Expedia, there was some flow that was before earnings, so I kind of didn't pay too much attention to it. SWKS and Google, I haven't seen anything yet from the real flow. Yeah, I heard Expedia missed pretty bad, right? Yeah, yep. Priceline 2 was down and came back, right? People like this Priceline because she can move. Wow, that had a juicy pull too. But the answer to your question, George, I didn't see. Again, I haven't seen real flow yet, outside of Thursday and Friday. We saw DHI, the home builder, catch some size May activity. Intel caught a big bet. And then the action from Friday, which is Tesla, Micron, Citigroup, Bank of America saw some activity. Microsoft had some activity. You know what I mean? So that's it. That's why, again, I'm saying something changed at the end of the week, Thursday into Friday, is that we started to see some real buying out there. Prior to that, there was GOTS. That's nothing in Brooklyn talk. What else we got? Yeah, Intel, Jordan's asking, Intel saw that big bet. Again, he, like the DHI, he was underwater, and then it came back Friday. But again, they don't care if it's early. They don't care if they're early. They don't care if they're early. Miguel saying, what do you consider good flow? How big has, in other words, Miguel's asking about the size of the flow and what defines real flow when I make that statement. It's more of here's the thing, Miguel. I know, okay, that when the big boys really want to make a bet, a play on the name, they aren't going to do it in weeklies. They're not going to do it in these cheap premium 14-cent calls out of the money. Okay. A lot of times they come in the money, near the money, deep in the money. They lay some big time premium. Okay. And they have some time behind it. So that's my definition of a real bet. Okay. All the other flow, again, in bull markets, you can make money because it's going to create momentum. Even the spec flow will create momentum. But the real money, like guys like Tepper, when there's activists involved, those type of characters, they're utilizing the option market as a form of leverage. You know what I mean? They're not rolling the dice. They're not looking at. They already own a crap load of stock, and they're coming into the option market and looking to take advantage of some leverage. So that's why bets like this that a lot of people ignore. What did I do with it? Oh, like you can see the bottom of the screen, even the Tesla bet. Like how many times we see Tesla, they're buying things for $1, $2. Like this is out of the money, but he could have went the cheaper route, right? I mean, basically he put on $1 million bet there and laid $37 in premium in this market. Like that's a real bet. It's aggressive. He swept multiple exchanges above the offer. He took out every offer he could on that line and ended up with 272 contracts. But, that's $1 million bet there on that small amount of contracts. Okay, so that's the way these guys play when they want to make a real play on a name, when they want to bet on a name. When they're specking on some buyout rumor or something like that, that's where you see the cheaper stuff come into play. But all of them, they're laying decent wood. Like, look at the Micron guy. Look at what Tepa's doing. And he's been doing that for so long. Do you guys remember the Micron Tepa sweepers, the most recent throughout this were the 22 strike. Remember, we thought it was his favorite number, 22? We were joking around. He just kept playing the 22 strike. He didn't care where the stock was, 32, 40. It was almost like it was his favorite number or something. And laying all sorts of wood. So now he came back and played the 21s to get it going, and some 24s. And keep your eye on the Micron action now more than ever. Now you have to keep an eye on Micron because there's a good possibility once he showed up, you know what I mean? Yeah, Micron pre-announced up their guidance, caught upgrades. Nobody gave a shit because of the market conditions, right, Jim? I think it was up that day, and then they just sold it off. So that's where he saw the opportunity here. And again, he has July, guys. Like, think about that. He's got some decent time. Micron, that could be home run. Yes, good call. A SVU saw some real decent action. Yes. 3 straight days of it. 3 straight days of it. Now, you had a nice move Friday. That's why I didn't bring it up. I wouldn't chase this move. You know what I mean? I wouldn't chase this move. But SVU saw some real nice sweeper activity. 3 straight days of it in a market where there was no buying. SVU, I think it was it Wednesday? Was the only call buyer. Like, I put top call buyers at the end of the day, top bullish bets. I think the list on Wednesday was just SVU. There was nothing else. But yeah, 3 straight days of nice action. There's an activist involved there who's really putting pressure for them to sell the company, break up and sell the company. So that's what's going on there. But some aggressive activity there. Yeah, they hit up April's and they hit up some March calls, and I think there was a little put selling as well. We're also seeing some put selling out there, which is a good sign. Now, the put selling is, some of it's more out of the money, so it gives them some decent cushion. You know what I mean? Hard to gauge like what they're looking for upside on the name. But we're seeing more put selling out there, which is a good sign. Again, it tells us that, okay, maybe they're unsure of the upside. Maybe there's there's still some weakness out there that they're concerned about, but they're willing to buy that weakness. Yeah, it means they're selling premium. Basically, they're selling puts. They're taking in a juicy premium right now, Jordan, right? Because the price of puts was through the roof. And, they're saying, hey, you're going to put me the stock at that level, I'll take it in the heartbeat. Yeah, more of that than anything else. Puts are outrageous. Puts are outrageous. I don't know if you guys see, I posted for members a lot, but I posted on Twitter too, the price of downside protection on some like major ETFs and all. Remember we were saying how cheap? Remember, Jordan, on here, we were talking about how cheap protection is, that it's so cheap that basically the wise guys out there, the smart money out there, they were so aggressively bullish because they can put on such cheap protection. And, I mean, now it's a little bit different, a lot different, a lot different. Another thing we're going to keep an eye on is the VXX stuff, VIX and stuff for next week. We're looking for put sweepers there, meaning they're betting on lower prices on the VIX. That could signal that, that monster squeeze is on the way, if not here already. That's one of the first signs we look for. We saw that pre-election, pre-Trump election. We started seeing some VXX, UVXY put sweeper activity in droves. So we're seeing a little bit of it, a couple bets here and there, but not that wave of it. Like if they get the opportunity, they're just going to plow the put side on that. Because right now you got the all these things trading in contango, and usually it's only a matter of time before it unravels. I think I got a chart on that too. I could show you guys. Pretty interesting. Let me show you. Yeah, here it is. Oh no, that's not it. Sorry. Hold on. I posted it the other day. Hold on. Let me find. You guys will find it interesting. That's what I'm looking for. That's not it. Bear with me 1 second. Nope. Is that it? No. What the hell did I do with it? It's got to be here somewhere. Anyway, it's a chart of the VIX term structure. The word contango, you probably hear them use a lot. And basically, the price of protection is higher over the short term than it is further out. And a lot of times, people are worried about volatility over the short term, but not too concerned further out, which meaning, it's a sign of a panic. I don't know what the hell I did with it. I post so much crap in here. I don't know what I did with it. Maybe it's all sentiment traders, so maybe I'll post it later, if anything. What other questions we got here? Energy. Yeah, energy. Well, here's the thing. I didn't get a chance to really look at it. I saw a little bit of it. I also posted it. The COT data out of energy. Did it shake out? It had to shake out some bulls. Anybody get a look at that? The COT data, the sentiment data, showing the longs, because they were extremely bullish. They all got caught, and there should be a nice shakeout there. Yeah, oil got hit over the head. I think same thing, Jim. Oil's tough because you got to worry about the price of crude. You know what I mean? With these energy stocks, always tough. It's a pain in the ass. Excuse my French. When there's other things going on, when there are other opportunities in the market, the oil, the gold miners, it's hard to get excited about those. But when they're rotating into those groups, then obviously I'll pay attention. But if there's other stuff going on, James, I can't get that link. Let me see. James posted a link on StockTwits, probably showing it. You could send it to me on Twitter, James, if you can, and maybe I'll be able to pull it up. Ani, do you simply focus on sentiment, wise guy action, and blank out? Yeah, pretty much. And Ani, the truth of the matter is, and you know me, sentiment, unless there are signs of flow, I can't even get excited about sentiment. Because sentiment could, listen, here's what sentiment tells me. In plain, simple English, okay? Like I'm shooting straight with you guys. I'm not trying to talk like some CNBC dude. When I look at sentiment, it's just, here's the logic in my head. This market loves to destroy the riffraff. No? Am I out of line by saying that? This market loves to hit the riffraff over the head. The little guy gets the short end of the stick in this game. From day one I walked into this industry, to right here talking to you guys. The little guy gets shafted time in, time out, every single time in this game. Right? Am I nuts by saying that? Not trying to be mean. Okay, it's the truth of the matter. So, sentiment at extremes tells me where the riffraff are lined up as a whole. When all of riffraff, and riffraff, I'm talking about the retail public, okay? The regular guy out there. And honestly, we're all in that category. So I'm knocking all of us. We're all in that category. So we're basically looking to bet against ourselves, which is always a good thing, okay? But when every person is lined up on one side of a trade, what is likely to happen? Okay, some may take longer to materialize than others. Okay, that's where the flow comes in handy for me, Ani. It helps with the timing aspect of it. Okay, but it's as simple as that. Okay, if you look back at every correction, okay, every correction, there's one, 2008, again, we keep going back to there, where sentiment got washed out, was so bearish, they were lined up looking to take advantage of the short side or well protected, and they got run over. Every single time. Like I said, 2008, what happened was there were these little mini rallies. They would last, honestly, a half a day. The squeeze would be vicious, but the selling, because of bigger things going on, was so overwhelming. So again, the game is numbers and probability. So that's why I look at sentiment. If I see riffraff is bearish and lined up looking for more downside, and I see the smart money lining up on the other side of that, what does that tell me? You want that type of trade time in, time out, no? What do you, hold on one second. I got a tickle cough, I saw. Jordan's asking, what does sentiment mean? Sentiment basically is the emotion. How, in other words, the stuff I look at, there's surveys out there, how people feel, what people think. What I look at basically is where people are putting their money where their mouth is. Okay, it's easy to say you're bullish, but that doesn't mean you're buying it, right? It's easy to say buy the dip, but are you buying it? You know what I mean? So I look at stuff where it concentrates on them putting their money where their mouth is, right? Bearish leveraged ETF buying, put to call, retail put indicator. All this stuff shows me, what the average guy out there is doing right now. And that's the definition of sentiment. That's what I look at. Okay. And then, like I said, the flow for me is a timing thing. Okay. Because everybody could be bearish. But my confirmation, I want the smart money to start taking the other side of that trade. And then that narrows down the timing aspect for me. You know what I mean? Does that make sense? Right, again, I call it the sweet spot. When everybody is bearish or looking for further downside, and the smart money is aggressively taking the other side of that trade. Yeah, and that's sweepers. Now on the flip side, it gets a little tougher. As far as when people are too bullish Okay? Because again, I wish it wasn't like this, but it is what it is. You know, I'm not going to try to force the issue. You rarely see flow change at the top while things are still strong. Why? Because their mentality is different at the top. They will continue rolling up, roll out, roll up, roll out, buy some protection. You understand? That's how they catch trends. So it's different when it's bullish extreme on the sentiment side. Like for example, what we just saw. Okay, up here, this whole entire move, guys, this whole leg higher in January, right here, I would say at least the second half of it was bullish extreme. All of it, this right here. All of it. You know what I mean? All bullish extreme here. So you could see if you shorted there, that would have been a lot of pain. That's why I have no interest in doing any of that. You know, I rather wait, line up, and especially on an intraday basis, that's where I feel most comfortable. You know, but everybody's different. On an intraday basis, meaning when I see the flow is bearish, all of a sudden sentiment is extremely bearish, and then all of a sudden sweepers come in aggressively buying calls, right? That's on an intraday basis. That's where I want to get long. So, but the flow trumps everything for me. The flow trumps everything because it's a timing. It's an indicator. What else? We got a couple good questions here. I don't want to miss it. Let me see. Where I lost a couple. Somebody was asking me, I think it was Maria, do I use internals? Not really. A couple people in the room, Maria, use internals. Throw it out. You know, we'll talk about them. We'll look at them a little bit. But a lot of times internals will coincide with the sentiment stuff I look at. You know what I mean? Like you're probably asking, you know, a lot of stuff really washed out there, right? As far as internals are concerned. I think like the McClellan and stuff like that are really washed out. Stocks under their whatever day average and things like that. There's a lot of it. So, you know, again, I'll look at it, Maria. I won't trade off it, but I look at a lot of stuff. I just don't trade off it. You know what I mean? I look at everything. I look at everything. I keep an eye on it. Oh, yeah. So perfect. You do what I do, Maria. Same thing. You know, it works, you know, it works hand in hand with a lot of the other stuff we look at. So it's definitely interesting stuff. Dean's asking if somebody wanted to check out the tape flow on options, can you recommend a good resource? Dean, I know I'm going to sound like a salesman, okay? But honestly, on the option end, if you're interested in reading the tape, you have to do it with Lucci. I'm being honest with you. If you're talking about futures or in general, there are several others out there that do it. But if you're talking about reading the tape for options, I'm being honest with you. Lucci's the only guy I would recommend. The only place where you're going to learn anything about that. I'm being dead straight. Again, I know I'm sounding like a salesman for the Lucci product, but I'm just being dead straight with you. You know, because not a lot of people do it on the option end. Not a lot of people do it on the option end. Lucci has a real knack for it. You know what I mean? He looks certain things he really keys on and focuses on. But the most important thing I think you'll learn from him, Dean, and everybody I told this to who's taken the Lucci course said I was 100% right. When to realize you're wrong. That's the most important thing, and a thing you have to get a handle on when reading tape. If you don't get a handle on that, you're going to be in for some pain. You know what I mean? You're going to be in for some pain. But you know, flow and tape, they work extremely well together. I mean, think of it. That's why Lucci and I basically, hit it off is because those two really gel well together. The only issue comes up, guys, when there's no volatility in the market. You know what I mean? That's where Lucci gets frustrated. When you got a melt up, the opportunity as far as on the tape reading end, you know what I mean? Everything's bullish. What are you going to do? So that's where it gets frustrating. But Lucci's like a kid in the candy store right now. Right. Sell premium. But even then, the premium, Jordan, you really got to look around. Like, it's almost not worth it at times. You know what I mean? And you got to be quick there too. The sell premium thing, again, you got to have a knack for that. I can't do it either. I can't do it. Every trader's different, guys. Everybody's different. You know what I mean? Everybody's different, but the sell premium, again, I recommend you take a course, know what the hell you're doing, because I've seen people get blown up selling juice. Okay? I'm talking about mangled, out of the game, blown up doing it. So I think, like I said, what Lucci can teach you is how to unwind it when you're wrong. It's a difficult thing. You think it's easy. It's not that easy. Yeah, it's unlimited risk. Of course it is. That's the problem. You know what I mean? That's the problem. That's why, like I'm telling Dean, in anything of that facet, you have to learn how to pull the plug. You see, for me, I need to keep it easy for me. I got degenerate blood in me. Okay? So for me, it's simple. Sentiment washed out. Call sweepers are coming in aggressively. Get long something. Get long things, right? I'm like a caveman. Okay? And then after that, it's, all right, the momentum's there, raise stops, take some profit, do what you need to do. If that momentum runs its course, dries out, and these things stop doing what they're supposed to do, hit the eject button. You understand? It's simple for me. It's not, oh, let me bid out of these things. Oh, you know what I'll do? I'll sell some weekly wings to take away some of the... my brain doesn't go there, because you got to understand what I'm doing throughout the day. I'm staring at the overall flow. Okay, it's not some scan that I got set. It's literally the whole entire flow of the options market. All right, and the other corner of my screen, I got some sentiment stuff that I look at. That's what I'm staring at all day long. So there can't be too much else going on or other stuff that I need to do for my strategy to work. So I got to keep it simple for me. But again, every trader is different. You guys heard the webinar with that dude Ranchero, who's an experienced trader, knows the game, found a little niche in the options market, and he trades professionally now. Now, again, once you have a little niche and you feel, some confidence in it, that's when you can start to look around and see little quirks here and there. So, like Ranchero could have stayed with what he does, right? His strategy, do nothing else. But he happened to run into the steam room, said, oh, shit, options flow. Maybe I can apply that into what I'm doing, make my strategy all that better. So now with his option strategy, he utilizes the flow. You hear a strategy, he sees aggressive buying coming into a name or with some time behind it. He builds a position, he sells some weekly calls against it to knock down his core. He's got a whole little thing going on. But that's him. Yeah, Snap. Oh, by the way, Financial Moose is asking about Snap. Snap was one of our better trades, believe it or not, pre-Friday. What happened was, first of all, Snap, let me make it clear, pisses me off. Can I tell you why it pisses me off? You guys probably know already. Snap was seeing some legitimate flow. You guys remember we were talking about Snap. This little consolidation, which was actually a good spot, right? Because I like this consolidation. You guys remember that? I like long, dead, choppy consolidations, and I like when the flow comes into it. Okay. Snap was seeing some good looking activity. I would say probably started around here. Okay. Weakness, weakness. I tried day trading it a couple times. I couldn't make a dollar. Okay. But you had earnings coming up. So I was like, oh man, they're gonna make people hold into earnings to catch the move off all that action. Because it was seeing some good looking action. And make a long story short, they did the job, earnings. Okay. So now we come in Monday morning. Lucci already is eyeing Snap because of how much bearishness there's been in it. He thinks a lot of people are caught and need to own it. So there's going to be a rush of buying off the earnings, off the gap up. Okay. So that's what Lucci was talking about pre-market. And then right out of the gate, ding, 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 9:30, Snap sweepers came in like a typhoon. Right at the open, boom, like a storm. So a lot of us just hopped in and caught a nice move on it. You know somebody who hit, what, 800% on Snap calls? Jesus Christ, Jordan. Jesus. Yeah, like, it just annoys me. Anytime there's decent flow and a stock catches a big move on earnings, I get pissed off because, I don't like earnings. It pisses me off, So here was, this is the Snap post earnings. Where is the one? Is this the one pre? Yeah, here's some of the Jan. See here? Look at these guys. Sweeper, sweeper, sweeper. Look, quarter earnings right to the T. These things were up like fivefold. And then this was, I think, post earnings here, right? Oh, look, this is the day of earnings, I think. Look at this. The 14 and a half. Look, decent wood for Snap, too. And then all this. This was the day. See, 9:32. And there were tons of small algo sweepers, just bombarded it all throughout the day. So that's it. Since then, I haven't seen little bits and pieces. But the day, the gap up, the morning of, that's where it caught all that flow after earnings. Yeah, you had shorts in it. You had a lot. That's why it was set up nicely for a further squeeze off the gap because they were caught. And a lot of times, guys, when we see those small sweepers, those are shorts that are caught. Like Friday, we saw a ton of small sweepers come in the squeeze. That's what happens. The shorts are caught, and the quickest way to protect is sweep some calls, weekly calls. But that creates momentum, right? Because the market makers want to hedge that off, and they buy Snap or SPY or whatever to hedge it off. And you get this. So we had this, then you had a little breather up front, and then this. And this is where the SPY got hot and heavy. What other questions? I apologize. I probably missed a couple of you guys. Twitter, the Twitter action. There's been a lot of action there. Twitter, this was the trade in Twitter, Jim. We all knew it. It came so late, and it was all like we were almost like starstruck. Look at this. Watch this. This was the order in Twitter, the most recent. Right before earnings. Okay, not a call buyer, not something that's going to be tied to earnings. This is a guy who that was the bet right there. So this is what they call a bull risk reversal. He sells 15,000 Feb 22 and a half puts and takes those proceeds to buy 15,000 Feb 32 calls for 37 cents. So this bet cost them 10 cents. 10 measly cents. Huge size. I think it traded more than 15 too when it was all said and done. Look what time it came into. 3:32. The day of they came out with earnings the next morning. So half an hour to the bell. Yeah, that's rare. You don't see that. Sometimes you'll see that, and then they'll sell stock, and it's stock replacement. This wasn't tied. It's rare when you see that, but when you see that, usually good things happen. It's worth the roll of the dice at the least. If you play earnings, it's worth the roll of the dice. A couple of guys hit it nice. Of course, me and my guys who don't play earnings basically just watched it. But Alex is saying he looks like he sold some after earnings for $2.15. Wow. Yeah, and that's that's a nice bet. 10,000 of it. Wow. Yeah, I didn't even catch that. So 10 cents to 2.15. That's not too shabby, huh, Alex? Not too shabby. There was you want to hear a great story, and it's risky stuff, guys, but people like to play this stuff. That's what I mean. Look at this guy. Wait, let me get, this is it, right? Feb 9th. Okay. Look at this guy. Amazon on Friday. Okay. He sweeps 370. So small. Weekly's expiring the same day. 13.25 calls for $2, right? Would you, Jim, you bought this? Stop it. These went to zero practically. Okay. You know where he sold them? 19. But listen, when you have their money, oh, what, you bought the stock, Jim? You played the stock off that? Wow. So, oh, you played an option. Wow. Yeah. So is that crazy though? So listen, don't get me wrong. There are good amounts of these that go useless the same day of expiration. But guys, again, you got to look at the big picture here. Okay. They play these things, and I'll tell you this, they win more than they lose. Net. I'm talking about trade wise, not dollar wise. But when you take an option from 2 to 19, with the proper risk management, you know what I mean? So that's why a lot of people get caught up on, that particular trade. If it's a loser, it's useless. If it's a winner, oh man, I got a crystal ball. But you see what these guys do. They play these things nice and easy with the proper risk management, and net, there are a lot more winners than losers. And when you hit one from 2 to 19, that makes up for quite a few losers. So look, a lot of people like this stuff in the room. They like this. If you're playing nice and easy, it's got its value. When you rely on this one trade to be a winner for you to be interested, then, like everything else, you don't have much of a strategy. Yeah, well, John's saying I take it from 2 to 4, and then we complain the whole rest of the way. You're more like me, John. You're more like me. I take it from 2 to 4. I think I'm a hero. Oh, yeah, that's a nice little score today. And then they go to 30, and I'm crying the whole day. There was also a nice trade. Amazon, there was a couple nice trades. On the put side, Lucci showed you guys in the webinar on Tuesday. A couple guys caught a nice short on Amazon right before that flash crash. There was a put sweeper, and then Amazon rolled over. So there were a couple nice trades. You know, again, if that's your style, this is the time. You got some volatility. You know what I mean? The call activity is going to stick out. The put activity has some value now, right? The put action was so useless, and especially forget about on a swing term basis, even on an intraday basis, the momentum to the upside was so strong that any put action was useless because it was a needle in a haystack. It was one put bet in a sea of green. But now, the put action has some value. If you see some put action coming into a rally and the overall flow is bearish, that could be an opportunity for you and has been an opportunity for many if you play that game. Nice, Jim. Very nice. Yeah, so, again, you swing traders had a lot of fun. I don't want to hear any complaints out of you swing traders. You had easy money for a period of time. Now it's more of the active intraday traders. Guys like me and Lucci was so frustrated to the point he started trading Bitcoin because the intraday action wasn't worth it. Me, I'm trading the equity so I can scalp and keep myself entertained. If you're day trading options, you're limited to what's worth it. You know what I mean? You need a move to be worth it. So now we got a different climate out there. Anybody else? Did I miss any? I know I missed a couple questions. I apologize. Hold on. Jay saying I was able to snag a ton of calls mid-afternoon Friday in SPY, closed some but kept most. March expiration, my probably lately hasn't been being wrong and has been closing too early. Yeah, Jay, that's a problem I still haven't solved. Okay? That's a problem I still haven't solved. It's tough, man. It's tough. There's no right answer there. If you're an active trader, there's no right answer. Like if you're a trend follower, at least you got something you could hang your hat on, right? You're looking at a certain moving average. It's very simple. If a close below that, you get out. You have something. As an active trader, especially in the option world, there's no right answer. Raise your stops, you're still going to get clipped. You're still going to get clipped. Let your winners run, you're going to give back a lot of profits. You can't survive that long. But Jay, I'll be the first to admit it. My big winners come on luck, Jay. I know that's something I probably shouldn't say, but a lot of my big winners, I get lucky. It's not some strategy that I put in place. Jim is asking about SMH. Yeah, there was some block call buying that came in Friday. One of the blocks, the big one, there was a $5 million block that was tied to stock. There was some other buying around it. But if you remember, again, a change in maybe character there. There was heavy put buying, and then now we're seeing some on the other side of the fence. Okay, and again, you've had a deep pull here. Micron catching some action, Intel catching some action, Maxim catching some action. Nvidia, yeah, I saw a couple little trades in Nvidia, but Nvidia was up huge off earnings, right? 14. God bless her. Wow. Mulan saying, question, Jesus, from what you see as far as flow is concerned, what are your top picks? Just trying to understand the flow aspect. What do you see as far as flow is concerned? Basically, the top flow I'm seeing out there, Micron, all of them are pretty much coming with time, okay? Meaning they're buying, but there's some time behind it. So Micron caught some big-time action. We showed it earlier. Intel caught a missile sweeper. Some of the banks are seeing some action. Citigroup, Bank of America, which, has held up pretty decent. BX, they went out to Jan there. A home builder, DHI, that was actually down on Friday. They bought Maze. That caught some decent action. Huge DHI bet. And DHI, another one, guys, you got to understand. This is a name, like I call the Micron sweepers, the Tepper sweepers. Micron, I call them the Bill Miller sweepers. Because Bill Miller, back here in this consolidation, there was some huge leap buying, aggressive leap action in DHI. Okay. Then I saw on Bloomberg an interview with Bill Miller, and he mentioned he's taken a huge position in DHI and a couple of the home builders. So since then, all the big sweepers I call Bill Miller, he loves to dive into the option world when he takes a shot. So make a long story short, did nothing for a good 2 months and then just exploded. So yeah, first signs of some Bill Miller sweeper activity came into this weakness and May calls. So keep an eye on further action there. Again, if the market rallies, chances are you're going to get a lift on all these things that have been shorted and hit over the head. But that's I think the risk right now is to the upside. I really do. Even for us, I think to walk in one day and just to see that gap up, that everything's okay all of a sudden. You know how it works, right? How many times have we seen that? We just see that huge gap up. You got a couple of earnings coming up, Pepsi, who knows, some big names out there. Maybe they knock the cover off the ball and create some bullish sentiment out there. But that's, I think, the risk right now. Overall, I think weakness is the opportunity, and to keep a close eye on some of the call activities there for some ideas and some trades. Okay. And I think if you're looking for the bigger move, okay, make sure you have some time if you're playing the options. Make sure you have some time, all right, because it solves a lot of problems. One, if you're early, you don't have to panic if you're underwater for a couple days, a week. All right, that's one. Two, if you get a rally and you're looking for more, you can absorb a pullback. Okay? Because if you're in some shorter duration option and you catch a rally and that's not enough, and then you get some profit taking there, you're going to be stuck in a pickle. You know what I mean? A lot of that premium drains as you get closer. Time is against you. So just make sure, even if you're sizing down contract-wise, we've gone over this a million times, it pays less stress to add some time there. And the last thing I want to say is the levels. You don't have to go all in at one level. Okay? You did some buying Friday into the weakness. Okay, you did a little buying there, that's fine. Sit, relax. Wait, Monday, Tuesday, we get some weakness. You can look to add something else there. Maybe we chop around and stay here for a little bit. You can look to add there. You run into the problem where, let's say you want to buy this dip here and you went all in. Okay? Even if you put a position on here, if you put on a small piece here, okay, you're underwater, but at least you can look to add another position, a different name down here. Okay, because this is a lot of noise here. And you can see by the range of these moves. We could get, even if this is a whole new bear market, we could get a rally back up to right here. If everything is as bearish as can possibly be, we can still squeeze to here. Jim is saying, time, not brains, time. I'm proof. No, but it takes a lot of stress out of the equation. Are the Teppers and Millers of the world tattooing the lows, or Or is their action putting in bottoms? Well, these guys love to buy weakness. You know, they love to buy weakness. That's their game. These are guys, you know, Elliott Management, all these guys, they rarely like to buy stuff that looks, yeah, like I keep bringing up the Marriott, like this. You know, they don't see opportunity there. When we get into markets like this, these little panic attacks, that's where these guys like to do some shopping. You know? Yeah, this Marriott, I mean, we were, you know, I think every single webinar we brought this name up because, I mean, look at this. You can't, what are you going to do with this? You know, after this point right here, what are you going to do with this here? You know what I mean? And what happens is the inevitable, you get a wash that wipes out, you know, likely half of that move at the least. You know, but again, this doesn't have to be a bottom. You know what I mean? To create an opportunity. Look at me. People say I'm no technician. Look at my lines. Look at this line right off. Bink. Look at that. Huh? You guys say I can't draw charts. Look at that. Like a Spalding. Don't ask me how I drew it, but like a Spalding. If you buy far out of the money options, do you think selling short term is worth it? Well, Mike, that's a good question. Mike is saying if you buy further out in time options, selling some short term and bringing in that premium, is it worth it? And my answer to that, Mike, yeah, in certain situations. Like, I don't know if you were on the webinar when we had that guy Ronchero, who's an active trader in the room. That's his strategy. That's his strategy. And John saying, did I draw it after the fact? No, I had this up there this whole time. That's just a simple line off the lows, guys. You don't need to be Ralph Alcampora to draw that line. You know, that's technical analysis 101. And then this is the line after it here, if you can't hold that. But yeah, so the answer, Mike, is yes. But it's not my strategy, so I can't elaborate on it. But if you can, dig up the webinar, go on the St. Lucia YouTube, dig up the webinar with Ronchero. He talks about what he does. You might find that interesting. Jim is saying SGMS, GBT with time. SGMS, most likely, yes. Again, just got too far ahead of itself. So we'll see. There's been some flow there. I'm sure it'll work out like anything else with time. GBT, I don't think there's enough of a pullback here that, you know what I mean? This thing's been strong. You know, GBT, you want to see it down in the 40s, I think, for that, to start looking at that. That's a little lofty. That thing's an animal. But yeah, and guys, the other thing is too, okay, if this is a bottom, okay, don't worry about missing opportunities and all that stuff, because what we're going to see is flow explode again. Okay, let's say we get a gap up, right? We'll see some flow there come into new names. Okay, then let's say we hang around that level for a little bit. If that's a bottom, we'll see call sweepers get aggressive there. So the call buying is going to tell us a lot each and every day from this point. You know what I mean? Because if we get a rally and the call buying dries up again and we're seeing nothing impressive, that's going to be a caution sign for me. You know? So there are a lot of things to pay attention to according to the flow, not just, you know, finding a short-term low and a trade out of that. That's great. Trust me. Everybody loves that. But the flow tells us a lot, especially now that we're going to get out of earnings season. You guys have been hearing me rant about that for how long now? When we get out of our earnings season, we're going to see the true colors come out of flow. You understand? We're going to see exactly what they want to buy, what calls or puts on, and what maybe they have no interest in. So a lot of good stuff ahead coming out of the flow. And this is a good thing that this happened during earnings, because the flow is extremely misleading, extremely messy during earnings anyway. Remember we were talking about that? So it would have been, the worst case scenario would have been if this market continued higher throughout earnings, because the flow, we would have known what's real, what's not anyway. This is the best thing that could happen there. I wish this happens every earnings season. How about that? If I could have my way, every earnings season. Because as earnings wind down, now we're going to see, all right, they're buying Micron. You know what I mean? Oh, they're rotating into the semis again. They're buying all the semis. You know? Now we don't know, because this call buying, it's so, the call buying and the put buying is so broad because there's earnings positioning going on. You know, like I said, like I give an example, Con put a decent looking order Friday, but they have earnings. That's why I didn't even mention it. Otherwise, it would be a candidate. You know, caught a decent looking order Friday, but could be earnings related. You know, what was that? You guys mentioned that other name that actually was moving. Oh, Newell. You know, there's been decent flow in this Newell throughout the whole week. They have earnings. You know what I mean? So it pays to stay patient, wait for post-earnings flow. We're seeing it already in certain names. And the more we get through earnings, we'll have more and more evidence, information of what the hell they want to do, where they're going to rotate, more importantly. By the way, XLU saw some buying. I know a lot of people were asking about that. The utilities, the Utes. What a disaster. Look at this thing. Whoop. Friday, some buying there. I know a couple guys, you were asking me on here last week on Twitter. They're really small buying. If anything, there was one day of weeklies. Friday, the first sign of some real buying in the Utes. All right, so you can keep an eye on further action there. And this is something that when they buy, they really like to come after. Like they'll pile them up and keep coming back for. One of the few ETFs they do that with. All right, so that's also one, if you like bottom fishing, think this is overdue for a squeeze. You know, this is something to keep in mind. Inflation, interest rates going higher, this is the last thing you want to own. But they factored a lot of that in here. So any glimmer of rates not pushing higher, you're going to get a squeezeroo in this thing. Yeah, REITs, exactly. Same in the REITs. All right, so some things to look at. Was there put flow in Tesla? Yeah, I'm sure there was. Oh, yeah, there was a put block early in the week. But right now, the only thing on my mind is Tesla's September sweeper. Nothing. The call sweeper trumps all. Guys, when the market does this, you get put action in everything. You understand? People scramble for protection in everything. Doesn't mean they're betting on downside. They may be long Tesla and they're buying some puts to protect. You understand? Now, when you get a lot of that, again, that's going to create downward momentum. That's where the value is off the put action. But trying to decipher what's a bet against the name, you know, past that day, it's a waste of time. Unless we get into a bear market, we're not there yet. We're not there yet. You know, so right now, There's been, call buyers, put buyers in Tesla, all sorts of jammies. The only thing of note that I'm going to remember is a good-looking September sweeper. So a sweeper with some decent time behind it. Now, Tesla had earnings. She was down off earnings. Why do I think she was up off earnings? Tesla had earnings when? The day before, right? So she was down off earnings. And and they hit the bottom of this range. That's where that sweeper came in, pretty much. Had some nice juice. But yeah, if you like Tesla, that's the perfect bet right there. You're not going to tail that one because you probably don't want to lay $40 in premium. But if you were looking to buy Tesla on the dip and we're hoping to see action, and it's rare, you got a perfect order there to build a plan around. September, it was real, it was aggressive. What else do you need to know? You know what I mean? So, but the key is, again, there's time behind it. So if you don't see the move this week, you got to be realistic here. What it tells you is the smart money out there aggressively is betting that Friday was a good spot for an entry on Tesla with some time. That's as simple as what it means there. You can find the webinar with Ranchero. I think the Sang Lucci YouTube channel. And it wasn't this past week, it was the week before that. You'll see the title on it. His name will be in the title. We're going to bring him on again too, Daryl. Yeah, Jim is saying the Ranchero webinar was awesome, must watch. Yeah, if you guys are, option traders and looking for particular strategies, basically gives you an outline of what he does. And we're going to bring him on from time to time to elaborate on it, share some other trades. He shared a couple of trades of how he played them and so forth. What we're going to start doing on that Tuesday webinar, we're going to start bringing some real traders on, guys who trade in the room. We're going to bring them on, and each of them share their strategy, how they use and utilize the flow, tape reading, equity trading, option trading, day trading. You know what I mean? To give everybody, not just members, everybody ideas and of different strategies of how it could be used and so forth. That's how you discover the things in this game. Like me, again, unusual options activities, how I got into it, how it was brought to my attention, when I realized I couldn't find any consistency just trading off that, that's when I started to really look into sweeper activity and how it was a powerful indicator of momentum. And that's how my strategy came upon, So you learn something new in this game each and every day. Some you can apply, some you can't. All right, guys. Anybody else? Did I leave anybody out? I apologize. Yeah, strategy is important. You got to have, Jim is saying how many times I mentioned the word strategy. You have to have a strategy that you're comfortable with, have confidence in. It's a must. If you come out here gunslinging, you're going to make some money, lose some money, make some money, lose some money. You're going to get hit over the head. That's the end game. You got to have some sort of strategy in place that keeps you disciplined, that has some risk management parameters around it. You know what I mean? It keeps you focused because there's a lot of noise on a day-to-day basis out there. That's the number one thing. If you're new to this game, or even if you're experienced in this game and just haven't really got it going, your number one focus should be to try to develop some sort of strategy and forget about trying to make money or trading. You know, you play nice and easy, you play small, you're testing a couple things out, you're not looking to get hit over the head. And then a lot of times when you stick with it long enough, there'll be something. There'll be something you stumble upon that you discover that allows you to win more than you lose. It may not be enough for you. It may not be accommodating to you time-wise. You may not be able to do it because you're working a job or this or that. You know, it may not be that exciting, may not be exciting enough for you, right? You may want to trade every day, and with this particular strategy, you can't. You can make money with it, but it's not as exciting as you thought it would be. That all may happen, but eventually, if you keep your eyes and ears open and you look for it, you'll find it. All right, guys, I appreciate you guys hanging out with me on another Saturday. Enjoy, get some relaxation this weekend. It should be a very fun, exciting week ahead of us. All right, but again, I think we lean bullish here. If we have the luxury of seeing any weakness out there, they showed their true colors on Friday. They show that they're willing to buy those lows. That's a starting point. All right, we'll see how they react. If there's any weakness, again, what I'm fearing is that gap and chase coming. I'm hoping that's not the case, but that's what I'm fearing. I'm hoping there's some, little weakness, maybe some chop. Give us a little more time. But this market moves fast, faster than I ever seen. All right, guys, if you have any questions, you know where to find me. You could go to wallstreetjesus.com. There's a strategy tab right up here. A lot of your questions there, from the simple answer to what's a sweep, to how to use this information, how I've seen people trade off this information, all right here in these short blogs. Okay. If you want to give the Steam Room a shot, we got a free trial, no credit card required. Okay. You don't have to put any credit card down, 3-day free trial. You'll get access to all this. Okay. I'm on audio, video throughout the day, giving play-by-play, sharing the color, the commentary. I'm like Al Michaels out there. All right. Throughout the whole day flow. And so you got a 3-day trial there, no credit card required. And then you have access to this. All right. If you're interested in just private Twitter, we've rolled that off, more affordable. If you can't be in the Steam Room, you have a job or whatever the case may be, you get access to private Twitter, $59.99 a month. You go to the products page right there, private Twitter. You get access to private Twitter, all the real-time action, open interest, some sentiment stuff, post commentary. The big missing thing here is the audio, video, and the experience with Lucci and other traders, obviously. That's the big difference. Okay, but all the flow is the same there. And another question I get a lot, if you are a member to the premium package, to the Steam Room, you have private Twitter included, free. It's not an additional charge. All right. If you have any questions, you know where to find me. Thanks, everybody, for hanging out, and good luck next week. I'll see you again. Tuesday, we have a webinar, so stop by.